Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so couple things, okay? So daily pivot, Bears had a big start to the day. They printed that 37.24 Sunday night. They took it down 125 handles overnight, traded as low as 35.96, touched the lower Bollinger Band, and then spent the rest of the day basically giving it up. This Globex has come back to retest the 20-day simple, the daily mid-band, down at 63.75, and they've bounced that about 30 handles, and it's about 8:30 as I'm doing this, and we're trading 36.94. So let's go to the hourly, and let's go back to last week. What did I tell you guys? So there were 4 levels, okay? The 20-day, the 9-day, the pre-FOMC price, and the weekly pivot. I said pick any 2 you want. Pick any 2 bears. Take 2 cards. Pick 2. Okay? And then close below them and maintain them as resistance for an entire session. Nope. So, basically they broke free. There was nobody there, and then they tripped over a blade of grass, fell on their face, and didn't score. I appreciate the short. That was great. And the volatility is fantastic heading into Christmas. But unless the Bears can follow those rules, unless they can do what I've been talking about, there's no sustainable downside in this tape. There are just dips that are going to get bought. There's higher lows that are going to get created, and it's going to head higher. So one good Sunday night into a Monday morning should not turn you into some perma-bear that's throwing a bunch of contracts at the short side and then adding and adding and adding and adding, which we don't do, but I know it happens out there. And I know people that are listening to this are doing that stuff. Cut that shit out. Just stop. Doesn't mean you can't be short. We had some nice shorts yesterday. Nice shorts. 20 handle runner on a short. But then we identified it for what it was, and we ended up long 38.5, and we rode that for 50 handles. You know why? Because the Bears are the Bears, and they have so much trouble sustaining key price. So, like I said, pick any of those 4 levels on that chart. Pick 2, close below them, maintain them as resistance for a full Globex session, and we'll talk about sustainable downside. Until then, every push down's a buy. You can be short, but it's a trade. When it stops working, take your money, get on the other side. Same stuff I've been telling you for a month. Nothing changed. We got a little dramatic there, which is fine. That's great. Now, could the news flow start to weigh on the tape more heavily? Sure. But it needs to actually weigh on the tape more heavily. You can't start projecting here that, well, this is the beginning of something, tremendous. And it's sustainable, and we're going to this, and you start throwing freaking targets out. I can't tell you how many freaking targets I saw on Twitter yesterday. Stop with the targets. Stop. Just stop. I know they make you feel, I don't even know, prescient. But what it does as a trader, and I don't care if you've been doing this for 20 minutes or 20 years, you start throwing targets out there, and you will start to gear your thesis towards your target. Why? Because you want to be right. Fuck being right, make money. Seriously. Scroll that on your wall somewhere. Fuck being right, make money. It's not about being right. It's not about who got the most out of Barron's on Sunday. So, shorts are cool for a trade, but until they follow these rules, they're not sustainable. So, what do we have going into today? Well, we've been hanging around weekly pivot and the pre-FOMC price basically since 7 o'clock this morning. So they took it down. They brought it into the mid-band. They brought it into the daily pivot. They tried to take it out for about 3 hours. They couldn't do it. Then hourly mid-band goes support. Up we go. They didn't blast through here, though. They didn't blast through here. So you've got an area that's going to get fought over off the open. So with the open and the type of day that I'm looking at today, I think that the beginning is going to be whippy. It's going to be sloppy. It's going to be choppy. It's going to, you got plenty to fight over. You got, they just threw the GDP number at the tape. Doesn't care yet. So, 33.4% versus 33.1%. Yeah, okay. So the tape doesn't care. 95's been resistance for the last hour and a half. Weekly pivot, 91. For our proprietary moving averages at 91, that's been support. Okay. You got VWAP down at 82 and change. You got the hourly midband down at 82 and change. Going down there, that's great. That would be fantastic. We're not going to do a ton off the open, and it's got to make a decision relative to these areas. It's got to make a decision relative to 90 to 92. It's got to, 95 has been rock solid resistance so far, and they can build on that. So we'll see where we go. But, this is one of these mornings where I feel like I got to jump on here, grab you by the shoulders, shake you a little bit, and say, look at price for what it is. Look, if they take it down from here, they break this low, we head down, and that's fantastic. A lot of handles there. Don't assume anything, okay? What's it doing here? What's it doing here? What's it doing here? Here, here, here. This is what it is. Not what we all want it to be. Nobody likes a down 4% day more than me. It's my favorite kind of day. It's easy to trade. But, the Bears have got a lot of issues right now. This thing is staying bid. The first clue that it won't be will be converting 2 out of these 4 levels, keeping them converted for an entire Globex session. Whole session. Didn't happen here. All right. Have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.